Hello, everybody. Welcome to the Stock Up with Larry Jones show. No, I am not Larry, but I'm a huge fan of Larry's. My name is Ashley, and I run my own channel, Trading with Ashley. And my good friend Larry loves all of you so much that he wanted to ensure you were kept fed even while he is away attending to family matters. So he asked if I would be willing to do a lesson for all of you today, and I see it as an extreme honor. You know, Larry is all about love. One of my favorite stories that Larry shared with me was after we became friends from being in this business together, he went back on a video that was several years ago, and he noticed a comment from me encouraging him. Now, little did we know at that time that we would later meet and become friends, but that just shows you how funny life is and how when you put good, positive vibes out there in the universe, a lot of times they come back your way. And so I want you, in the spirit of Larry, to go and do something nice for somebody today, a stranger that you don't even know, somebody that you could just lift their spirits. Because let's face it, Valentine's Day is kind of hard on individuals if they've lost a loved one or if they're not in a relationship and they see everyone around them is. It's just kind of hard. So go do something nice for somebody today. I am sharing with you on the screen some of Larry's best plays this week in his group, Money Moves. So if you want to join that link, he's going to leave the link for you below for you to join his group and get all of his special plays. Also, Larry has a complete course that's available for all of you that is really wonderful, and it shows you a variety of ways to trade. In fact, I even have a few chapters in his course. He'll leave that link below as well. What I am going to talk to you about today is something that will actually help you next time you are wanting to take a trade that Larry or somebody else calls out that you think you could profit from. But you may not have enough time to get your entries and exits just right. Maybe you're busy, maybe you're working, and you like the idea of a trade that he is putting on, but you just need the luxury of more time. What I'm going to share with you today is how to select a different date on your call option that will pull the trade out further for you and allow more time for that trade to work in your favor. When you buy call options, oftentimes you are fighting against time because if you buy a shorter term call option, let's say anything that is about 45 days from expiration, then you have to choose the right direction and that stock has to move up pretty quickly. Well, this one little trade hack that I am going to share with you will give you more time for the trade to work in your favor without aggressively eroding the trade. And I'm sure all of you heard of the term a leap option. Well, a leap option can be a call option you purchase that's a year or more out. But the further out you go, the more expensive those call options are. And the reason that some of the trades are so popular with the shorter dated call options is because they're less expensive. But there's a happy medium for those that are too busy to get in and out of the trade. And I call that a skip. I've actually trademarked this strategy. It's called the skip call option, and SKIP stands for Safely Keep Increasing Profits. So what I'm going to share with you today is going to show you how to select the right call option if you want to expand the life of the trade and give a little bit more time in your favor for the trade to work out. Now, you may not make as much as quickly, but also you won't lose as much as quickly if the trade works against you. Now, I use both leaps and skips quite a bit in my community, and it has provided that turbo boost for our portfolios, and we're enjoying some really good returns this year as a result of using these tools. Now, for those of you that are interested in selling call options for a living like what I do, that is a great way to make money. And I have a gift for you. It's a free gift, and Larry's going to leave the link in his description. I am offering a free webinar tomorrow, and this will allow you to learn this incredible strategy of selling call options. It's my way of giving back to the YouTube community. So if you are interested in that, be sure to register because there is a limit and it's almost full, but I wanted to offer those last few remaining spots to anyone that's interested. All right, let's go into the computer and I am going to show you everything you need to know to purchase a skip call option if you want the luxury of a little bit more time in your trade for it to work in your favor. I'm currently looking at the 3-month chart and I have populated Bollinger Bands on here so that I can take a better look at where this stock is trading in its price life cycle. The band serves as a good guardrail for a stock. Do all of you remember when you were younger and you would bowl and you had those guardrails that would pop up so that your ball would stay within the guardrails? Well, that kind of serves the same purpose for a stock in the Bollinger Band. Now, every now and then it will pop outside of the guardrails. You can see that right here. It happened when it went above the band, and there's times when it happens below the band, but typically it comes back under the cover of the band in short order. And so the fact that American Airlines is trading at the bottom of the Bollinger Band on the 3-month chart tells me it will more than likely want to turn around and start heading back up soon. The other little telltale sign I like to look at is right here. It's the RSI. This is the Relative Strength Index. In any time it is nearing 30, it's considered oversold. And we're kind of close. We're not quite there yet, but it's close enough to go ahead and start to establish my trade. So looking at these two factors, the fact that we're at the bottom of the band and the RSI is close to 30, now I am going to go shopping for a call option that expires anywhere between 3 and 9 months out for this trade. Once you get to an option chain, this is the tradier brokerage, and I like it because the way it's laid out, it's real easy to see. The first thing you're going to have to consider is your expiration date. Well, remember, these are a little bit longer term. So at this point, we're trading on 2/14. So I want to go out at least 3 months, maybe a little bit longer if you can afford it. So it looks like that's going to put me in May of 2025. Now, don't worry, you're not going to have to wait until May to cash this in, but it does give you the luxury of time, and it allows for that price movement of American Airlines to go back up that band so that you can gain some really good money from it. So here's what you would do. You'd select that particular date for your expiration date. And then you come down to your option chain and you're going to look to the left here. This is where my calls are. Now, when I purchase skip call options, I like to look for a delta anywhere between, here's your delta, I like to look for a delta anywhere between 0.6 and 0.7. And this $15 strike price right here, it looks like it might be perfect. It's got a delta of 0.66, and what this means is for every dollar that American Airlines moves up or down, this option that cost $196, it will move by 66 cents. And so you can kind of get a better sense for how much money you may make or you may lose as it goes up and down. So what I would like to do in this case, the fact that I think that there's more upward momentum for this stock because it's at the bottom of the band, I am going to place a buy order for this particular strike price. When I send it to a ticket, it looks like this. It's American Airlines is the symbol. It's a call. The $15 strike, here's my expiration date, and it's buy to open. Now I'm purchasing one contract that represents 100 shares, and I like to put in a limit order so that I ensure I'm paying a reasonable price for this option. It's trading in between $198 and $202, so I'm going to put $2 in here because it's in the middle. And then when I preview it, it shows me how much it'll cost. So I'll be paying $200 for this skip leaps option on American Airlines. And let's see how much money I can make if American Airlines goes ahead and moves to the top of that Bollinger Band we just saw. Now, in my community, I always teach risk management. You have to go into a trade knowing when you're going to take profit and when you are going to get out of the trade if it didn't work in your favor. So there's a few rules that I like to put in place for the skip call options. And here they are. If the trade is working against you, once it pulls back, let's say 50%, at that point, the trade has to have quite a big catalyst to then push ahead and make you money. So at that point, you've basically lost about half of what you paid for the trade. At that point, I exit the trade and then use that capital for a different trade that you have more confidence in. Now, if the trade is forging ahead and you're doing really well with it, I like to check where my stock is in its life cycle to determine if I take profit now or if I let it run a little bit longer. Let me show you the technical analysis that I use to determine if I go ahead and exit a trade that's making money on these skip call options. What we're going to look at, we're going to look at an exit as long as this price arrives before 45 days before expiration. It would be a good time to exit this trade. 1853 is the top of the band, so we're going to look at an exit anywhere between, let's say, 1750 and 1850. When I take a trade out like this, I like to put it on an option calculator so that I can best determine how much money I will make and when to take profit. And so this is expiring on May the 16th. So what we want to do, we want to ensure that we address this trade. Either if it loses 50%, we go ahead and get out, or we want to take a look at it at the end of March before that 45 days kicks in. Now, 45 days from May the 16th is going to be around April the 1st. So this will give us enough time to decide what to do with the trade. Now, I have it populated right here. This is the $15 call expiring on May the 16th. It did cost us a couple of $100. And what you want to do is you want to look here on the option calculator, and let's go to that 1760 mark because we had seen that it could possibly get there. Now, it'll probably take a few weeks for that to happen, but let's settle in here right here, maybe at the beginning of March. If it's back up towards the top of its Bollinger Band at 1760, then this is showing you on March the 7th, it'll be worth $111 more. This is what I will profit. And so that's a really good trade, and I'd want to consider getting out of it at that time. I paid a couple of $100 and I'm profiting $100, so that's a really good return in a short amount of time. Now, if it goes up just a little bit more to the top of that Bollinger Band, it looks like I'll make even more. I'll make closer to around $170, maybe even $200 as it gets to the top. But if you see that trade at the top of the Bollinger Band, or if it jumps out of it, you want to go ahead and close this down and take your profit, because just like those guardrails I mentioned with the bowling ball, there's a good chance it's going to start pulling back at that point. So you don't want to see it get to these high levels and then suffer through as it rolls back down over the coming days. So you want to look at the placement of the band in anywhere between that middle part of the band, which would be around 1760, 1750, all the way up maybe to the top of the band. You want to take profit in this area. But without a doubt, regardless of where it's trading at in the band, once you get to the end of March, you want to see if you're in profit, go ahead and just lock up your profit and go ahead and sell it at that point. If you are at the point where we are 45 days out from the expiration, regardless of where we are in the price life cycle with technical analysis, I like to exit the trade. The reason is, once you get to the 45-day mark, time decay is more aggressive, eating away at your profits. So regardless of where it is at its price life cycle, I would put myself a little reminder on your calendar to check that trade at least about 50 days out so that you can then determine the best next move to ensure you lock in profits. I hope all of you enjoyed today's lessons. I would love for you to flood the comment section with all the love you have for our dear friend Larry. I'm sure it will lift his spirits on Valentine's Day. And for those of you that register for my free webinar tomorrow, I will see you tomorrow night, and I will teach you everything you need to know about selling covered calls.